Welcome to our latest webinar. And we're going to be looking at a very important topic today, which is about ESG and sustainability in relation to venture capital and startups. Just to set the context, ESG is like environmental social governance that comprises of a set of principles, and it touches on all issues ranging from diversity to board structures to labor relations, supply chain, data ethics, environmental impact, and legal requirements. It focuses on internal practices and processes that could support both a fund and its portfolio companies to make them more sustainable. We're doing today's session in partnership with Ease Ventures, who will be launching their Sustainability 2022 report today. Over the last several months, some of the VCs in Southeast Asia have stepped forward with initiatives to tackle ESG. So what are the implications of venture capital being used to back companies that are actively engaged in the fight for a more sustainable future? And how can purpose be balanced with profit? How does building a sustainability agenda into an investment thesis work, both in practical terms as well as in implementation? And it's both for investors as well as for startups. So we're going to be discussing all of these points. And for that, I'm going to be joined by a panel of experts who have spent a large part of their lives and careers at the intersection of business, private capital, and sustainability. So I'm joined by, like I said, I'm joined by a panel of experts. They are Uttari Octavanti. She's the co-founder and chief sustainability officer at Aruna. We have Avina Sujatro, who is the venture partner with East Ventures. And we also have Devahuti Chowdhury, SDG Impact Specialist with UNDP. Before we kick off the webinar, I'm just going to ask each of the panelists, maybe just to take less than a minute each to introduce themselves and their respective firms, and then we'll get into the discussion. Uttari, do you want to go first?
Yep. Okay. Hi, everyone. My name is Uttari. I'm the co-founder and chief sustainability officer of Aruna. In Aruna, we actually have a mission to helping like the small scale fishermen and connect them to the market access with providing the technology. But we also realize that sustainability is one of the things that should become our concern. So that's why like starting in 2020, I think we start our initiative and create like the specific team to ensure like the sustainability and ESG in our business process.
Yeah. Thank you, Avina. Please go next.
Sure. Thanks, Joji. I'm Afina. I'm a venture partner at East Ventures. We are a pioneer in venture capital investments in Southeast Asia with focus in Indonesia. So we invest in high potential companies from two of our fund strategies in seed and growth across verticals in the technology space. We have invested in over 200 companies and generated over 30 exits for our investors, and excited to see more in the coming years. So pleasure to be here with Uttari, who is one of our portfolio company, and Devahuti with UNDP, who we have loved the work on the SDG investor map in Indonesia.
Yeah, Devahuti.
Sure, and thanks for the warm welcome, Joji. And I am the SDG Impact Specialist for Asia Pacific at SDG Impact, one of the many programs that UNDP is running. And SDG Impact is really part of the UNDP Sustainable Finance Hub and is working to accelerate private sector contributions towards the achievement of the SDGs by 2030. The Sustainable Finance Hub initiative started just about 3 years ago, so it's very new. And it's driven by a very keen awareness that for sustainable outcomes to happen, there needs to be adequate funding and capital to push the achievement of such outcomes. And us, which is the SDG Impact team, we sit under this finance hub, and the objective is really for us to help businesses and investors embed sustainability at the core of their management decisions and really help direct capital to where it can make the most difference to people and planet. So very pleased to be here and looking forward to our discussion today.
Great. Thank you all the panelists for the introductions. Avina, let me kick off the discussions with you. Well, several other asset classes from buyout funds to private equity have seen a big push towards ESG over the last 1 or 2 years. Venture capital has been lagging behind. So what do you think has changed recently, and what are the main drivers for this push, and why now?
Great question. Thanks, Joji. Well, as an investor, we have to be at the forefront of changing consumer trends and behavior. And what we see here now are consumers are increasingly concerned about ethical business practices. There's a shift in consumer preference towards environmentally friendly and socially responsible products and services, and that will allow them to win more customers' trust, right? On the other side, we also see employee attitudes are changing. If you hear of the great resignation in the past years, right? Workers are choosing to work for companies who are impactful. So companies with a stronger ESG narratives will be able to attract and retain quality talents, and in turn increases overall productivity. I think the pandemic and climate crisis has also further escalated and provide more urgency as well. Cannot be business as usual, and we need to progress, right? Given higher transparency and prevalence of social media like Deal Street Asia as well, I think companies' reputation will be better protected with good governance and proper risk management in the company. So for us, we are a strong supporter to embrace and be at the forefront of this sustainability journey in Southeast Asia. And we believe that digital technology and overlaid with sustainability will create a more inclusive and sustainable future for all.
Yeah. Avina, just a quick follow-on question. You are launching a sustainability report 2022 today. Can you just take our audience through the highlights, highlights from the report? What are your findings?
Sure. So for us at East Ventures, what we have noticed over the past decade of investments, we are not only generating very strong financial returns, but also strong impacts for the ecosystem and the society as well. In our journey, we have recorded over 86 billion of annualized GMV to date in our portfolios. Further, our portfolio companies have drawn over 6.7 billion of follow-on funding to the region, and that's primarily in Indonesia. We also see that our portfolio we have mapped them to contribute to 16 Sustainable Development Goals by the United Nations. And on the diversity, equity, and inclusion, we have 52% of our workforce are female, and 1 in 3 of our investing partners are female. On the portfolio side, 25% of our active portfolio are founded and co-founded by women. We do believe there is still significant progress we need to make, and hence we started an initiative called Women with Impact to provide more perspectives and empower more women to continue in the workplace, to reach senior leadership roles and become strong female founders as well. 2 other initiatives that we highlighted in our sustainability reports are Indonesia Pasti Bisa initiative, which during the pandemic, we think speed and agility are very, very important to pull together our ecosystem to respond to the health crisis. And we also have the EVDCI report, whereby we map the digital competitiveness of the different regions in Indonesia, so that the attention is not only in the first-tier cities, but also in the second, third, and fourth-tier cities to build a more inclusive country. The report also contains overview of our sustainable investment strategy and toolkit, and how we integrate ESG in our organization, starting from the leadership, the investment team, legal, value creations, as well as across our investment lifecycle, from the deal sourcing up to exit of an investment. So we hope this report will inspire and empower our ecosystem, the broader communities and stakeholders towards a more sustainable and inclusive future.
Yeah, thanks, Avin. I think for all our audience, we will ensure you get a copy of this report post the webinar. Uttar, let me come to you. You're among the few startups in Southeast Asia where a co-founder also shares the designation of the Chief Sustainability Officer. How did this come about? And is it because of the sector the company is in? And was sustainability something your co-founders and you had in mind when you first began your startup?
Yep. Thanks, Georgie, for the question. I think this is interesting because not much startup want to concern in sustainability, not just because it's something new, but it's also something that very complicated enough to understand. But from Aruna perspective, we see this business as something that we want this business to be sustainable. So in many cases, most of the founders or the startup leaders, they think that if we talk about sustainability, we just care about the environment, and we just care about how to take care like the ocean or so on. But if we talk about sustainability, it's actually something more than that. Sustainability in Aruna perspective, it's actually concerned about the people, the planet, and also the profit. How we ensure that this business is going to be profitable, but in the other hands, we can give impact to the people and also the planet. That because Aruna itself, we take like something from the ocean, it means we have responsible to take care the result of it. So because of that concern, and we very serious about sustainability concern, that's why we create like the specific division about sustainability, and even me as a co-founder also want to focus on that. So I think that's the first reason why we want to start in sustainability. The other things is based on the research that I found, I think from IFC or something, it shares that the company that start in ESG, 80% of them is successful and become more sustainable and long-term company because they not just profitable, but they also care about impact. I think this is something that's very important for a company to start more concerned about the sustainability itself, because we just not concerned about how to get like a profit, but how to make this business more sustainable and continuous until the end of the day. So yeah, I think that's the most of the reason why we want to start this.
Yeah, no, thank you for sharing your views. But just quickly wanted to ask you, you also raised a 65 million Series A round of funding not too long ago. And you're going to be using that for regional expansion and moving to more markets. As a startup, all startups are about fast growth, expansion, gaining market share, being present in new geographies. Along with all of this, as a company, how can you build a practice around sustainability?
Yep. I think the first of all, before we start building like the sustainability practice in the company, the first thing is to have like the great support system, because not all company, I think they can I think they want to shift to the sustainability habits, but again, they don't have the support system. But what we have in Aruna is actually a great opportunity because we have like the good ecosystem. For example, we have like Spencer as our investor. They also want to shift to the sustainability and ESG matters. We also working together with the Bank of Indonesia. We also working together with the WWF. That also want to concern in sustainability. So I think because of this momentum, we have like the ecosystem that want to support us. And after that, we can move it to become like the regulation of our company. In terms of implementation, we also realize it's not something that can happen in one night. We need to create like the roadmap. That's why in Aruna, we also have like the 3 years, 5 years, and 10 years roadmap for sustainability. We start in a very simple way. For example, we increasing the numbers of fishermen that understand to use like the sustainability methods in our business process. And the second step, we also have collaboration, for example, with the research company or with the research university to ensure like the sustainability model and so on. So I think that's the main concern of Aruna and how we become like a more sustainable.
Got it. Devakuri, let me come to you. Thanks for waiting. The SD, you recently launched like an investor map for Indonesia, and you had a similar initiative for India. And for Indonesia, the SDG had identified about 6 priority sectors and 13 subsectors and 18 investment opportunity areas, including the 6 sectors where FMB, healthcare, education, renewable energy, infrastructure, and finance. What has been your experience with these sectors when it comes to investor interest?
Sure, and thanks for the question, Jyoti. So, just to set the context, the SDG investor maps are really crafted to highlight investment opportunities that lie at the intersection of public policy, development needs in a particular country context, and also private sector interest. And so far, we have published maps for about 19 countries across the globe, and Indonesia is the first map to come out of the ASEAN. And in the coming months, we'll also see maps for Thailand, Cambodia, Vietnam, Laos, Philippines, etc. Getting launched and published. So really moving focus to that regional kind of intelligence. But moving the lens to Indonesia and to your question, the 18 opportunities that we have identified, they appear in the map because they have established business models and market intelligence around investor interest, which includes successful fundraisers that have been done by companies in these spaces, and in some instances, even successful investor exits. And we spoke to nearly 45 investors and enterprises besides doing some really incisive desk research to complete our mapping process. Hence, it has been really encouraging to see investor interest and a lot of VC activity in particular in social sectors such as education, healthcare, climate change related investment themes, and all of them with digitalization as a really strong underpinning theme. But really the trick now is, with the map in place and the market intelligence in place, is to see how this map and this market intelligence can be applied to take these models to the last mile populations in low resource settings, where these services and products are needed the most. And those are the partnerships and collaborations that we are forging as we speak.
Got it. But just quickly, you talked about presenting these to investors, and what has been their response when it comes to using the UNDP framework to assess the social and environmental impact of their portfolio?
That is a good question, Jyoti. And to be very honest, it's a journey and a process. SDGs overall, now they are a very well-recognized framework, and we have companies and investors reporting on SDGs, and especially SDGs that they claim to impact. However, when it comes to really putting brass tacks to this claim, like what SDG targets are you looking at? Because you have the 17 SDGs, but you also have 169 targets, accompanying those SDGs. How are you embedding your intention to create sustainable outcomes from your business or fund? And how are your management decisions really driving this intentionality? And how do you ensure that reporting and disclosures are avoiding the risk of ESG or SDG washing? So there is very little evidence to show for all of this. And you can see from the public discourse, there are these questions that are coming up, asking all of these questions. And this is also one of the reasons why we crafted and launched the SDG impact standards, to really drive home the point that good decision-making process precedes strong reporting and disclosures about sustainability. And to accomplish this audacious task, it is not just about spreading awareness about our standards, but also really helping unlearn behaviors that have so far focused on looking at the impact of environment and social factors on financial outcomes of companies and not the other way around. So having said all of it, I think we're also very encouraged by several consultations held with private sector players, including the one that we had with East Ventures very recently, as we crafted our standards and we piloted them before our launch last year. And we have strategic partners like Temasek Trust in Southeast Asia to help really anchor the standards in the business as usual practices of firms and funds. So while it's a journey, we do feel optimistic about moving from awareness to experimentation to adoption, and then onwards to a recurring assurance framework that can really help authenticate a company or a fund's contribution to sustainable goals.
Got it. Avina, let me come back to you, and quoting from your report, your sustainability initiative, it says is built around, you have the statement which says it's to enable high potential companies to grow sustainable market propositions, thereby empowering a more inclusive society and the region's economy to prosper. Can you give us some examples of this in action?
Yes, sure. Great question. We have strong belief that technology and digitalization are crucial to developing a more inclusive society. So a great example here is Aruna, but I'll let Utari take the lead on sharing more about the company. We also have other great companies in the portfolio. For example, in EduTech, we are the first investor in Ruang Guru, a leading edtech player in Indonesia. They aim to provide equal access to education through technology, anytime and anywhere. So to date, they have over 25 million students, over 70,000 learning videos, and they also have various initiatives to support better education in Indonesia, including teaching fellowship that has benefited over 140,000 teachers across 33 cities in Indonesia. They also have Ruang Guru Academy scholarships, and that provides 32,000 participants with employment challenges, various trainings so they can improve work competencies and in turn be able to secure jobs going forward. Another sector in health tech, we have HomeAge, which enable wellness and recovery through personal care. They have over 8,000 curated professional caregivers, doctors, and nurses, and providing that holistic care to older adults and families through technology, essentially being able to access the caregivers with an app. And during the pandemic, they were able to reach over 100,000 COVID-related beneficiaries through their technology. We also have two portfolios in biotech. One is Nala Genetics that's based in Singapore. They are able to provide cost-effective pharmacogenomics in Southeast Asia and aiming to reduce adverse drug reactions and prescription efficacy through DNA testing for the local population here in Southeast Asia. Another one is Nusantix, which is a biotech company based in Indonesia. They're able to repurpose their capabilities actually and design the first locally produced COVID-19 PCR test kit at the beginning of the pandemic together with biopharma. And that contributed to about 70% reduction in cost for testing here. So to date, not only that they are able to innovate and release the variant-specific COVID-19 PCR test kit and an air scan capability which detect airborne infection risks and supporting safe school reopenings in this new normal. So very, very excited about all the technologies, innovations that are coming up in our portfolios.
Yeah, thanks for all the examples. But just a big picture question to you in terms of, while we've seen progress at the level of individual funds, some LPs also taking sort of baby steps, and we're seeing a general industry push towards ESG and sustainability. But what do you think is still missing from the whole initiative?
Another great question. I think the core element that needs to be established is the standardization of measurement and metrics, right? Today, there are various voluntary ESG standards, a lot of we came across during this journey. There is the Carbon Disclosure Project or CDP, there is a Global Reporting Initiative or GRI, there's UN SDG Impact that we're learning with Devawati here. So we believe clearer standardization and measurement will be able to let the industry progress much faster and have a more comparable metrics as well. And then at the same time, we also became the first VC signature in Indonesia for UNPRI. So for us, it's great to see that a lot of asset owners and managers of about $100 trillion of asset under management signing up to UNPRI, and huge growth from the numbers last year.
Yeah, Devakti, in relation to what Avina just said, when it comes to investors, both GPs and LPs, do you think most of them still don't know the difference between impact investment and ESG?
Yeah, that's a good question, Joji. And I think there is a lot of confusion as to what constitutes impact and where do the boundaries lie. And that can be a little dangerous at times because especially because, with ESG reporting that we see, a lot of it that is out there, it's more about metrics that allow for an enterprise or fund to calculate their non-financial risks. So beyond the traditional financial accountability. Impact, on the other hand, is constituted by the, what are the material outcomes of your business action on people and planet, and then also understanding the various degrees of such impact. So for us, therefore, impact and sustainability need to become part of everything that we do and not as a small percentage of, let's say, corporate portfolios. And just to put things in context, according to recent OECD estimates, there is an annual financing gap of almost USD 3.7 trillion in emerging economies if we are to achieve our Agenda 2030 commitments. And this has increased by 50% because of the adverse effects of COVID-19. Now, the total financial assets held by banks, institutional investors, or asset managers are valued at almost USD 378 trillion. And therefore, if we do the simple mathematics here, just a mere 1% of this needs to be reallocated to emerging markets and least developed countries to really start the process of bridging this financing gap in the SDGs. So basically, even if I use a traditional myopic lens to describe the financing gap, we are still not there. So clearly, despite this huge movement to adopt and adapt ESG principles, there is a lot that needs to be done, and we really need to recalibrate how are we looking at impact and how are we integrating that as part of our business decisions.
Sure. But specifically when it comes to tech and startups, there's also a lot of confusion related to, especially when you talk about ESG and sustainability. There's a lot of confusion in terms of the language use. If you look at the West, there is this whole movement on, ethical tech, human tech, then there's responsible tech, inclusive tech, and then there's then diversity is thrown, and then there's accessible tech. And each country or each region and the way the companies there or startups there and investors, they all look at it with different lenses. For instance, language that's used in one country or one particular environment, like say China or India, may not be relevant to say Southeast Asia. Also, different geographies tend to feel the benefits and harms of tech at different times. So when it comes to, again, VCs and tech, are we using the right language?
Yeah, and yeah, just coming to, if I look at technology very broadly, and, because it's also a very important part of how we are doing these SDG investor maps, where digitalization seems to be an underpinning theme that is coming across sectors. Now, technology is definitely being seen as a great equalizer that can solve for issues around accessibility, affordability of products and services. In fact, for our Indonesia SDG investor map, and even for others, like I said, we have digital solutions underpinning investment themes, especially around education, healthcare, and really helping, looking at business models such as telemedicine or e-pharmacies or education technologies, taking these products and services to the last mile. And tech-based solutions also contribute far lesser to GHG emissions, and therefore, are also seen as sustainable by definition. And they're certainly a favorite when it comes to VC investments in Southeast Asia. And I was reading one of your reports, Deal Street Asia reports that showed that tech startups raised over USD 8 billion in 2020. And I'm sure this has increased by a lot. And this was almost 5 times an increase from 2015. So I think when it comes to language, the trick or the challenge is really to see how these tech solutions can scale beyond just urban areas or beyond population segments that can afford them. So tailwinds such as increasing internet penetration, smartphone penetration can aid this process. So looking at the economic potential of scaling up to last mile populations through accessible and affordable solutions, looking at women and other vulnerable groups such as senior citizens as economic drivers, and curating solutions that lower the entry barriers for them, but thereby democratizing how technology is being used, and creating vernacular platforms using voice technology for non-literate populations. I think there are several ways by which you can address this language issue by inclusion, affordability, accessibility. So I think overall figuring out the language is not difficult if the stakeholders that you wish to benefit through such tech solutions become part of its making. And I mean, it's really not, isn't that what the essence of technology is really, continuous iteration and improved user experience. So I don't think it's really that confusing.
Yeah. In terms of the data points used, I think if I'm not mistaken, tech startups in Southeast Asia raised well over 20 billion, I think close to 24 billion in 2021. That's like, it was a record year, which produced 25 unicorns in Southeast Asia. That's more than the number of unicorns produced in the last 10 years. Back to the whole ESG and sustainability. Uttari, let me come to you. When it comes to Aruna, as a company, did you have different sustainability goals at each stage of your growth? For instance, when you were at a very early, like a seed stage, at that time, for seed companies, it's all about product market fit. And, that's when you're figuring out your product, your services and all of that. So at that time for companies, should it be restricted to whether the product or the services that you offer, whether it'll have a net positive impact on the world, and whether it comes at a cost of workers, right? Is that what companies should look at that stage?
Yeah, thanks, Joji. That's very interesting question because in Aruna cases, we also not direct implement like the full metrics in our very first stage. But what we concern is at the very beginning, our mission statement is already consists of the sustainability matters. So what we find out like the problem of Aruna when we try to give the solution for the customers is most of the customers have and already changed their behavior. They tend to like the seafood that catch by the sustainable fishing practice and so on. So that's also one of the reason why we create Aruna. So if you ask about how we implement and what is the timeline, I think the best time for the startup to fully implement it like the sustainable metrics in their company is actually once they already understand their customers or market, because again implementation of sustainability actually also can give you like the extra time, extra cost and so on. But as long as you have like the great ecosystem and also the great customer that also want to consume your product because you do like the sustainable way, then it become like the balance between the profit and also you maintain like the planet and the people. So I think that's how like the startup can implement like the ESG metrics once they have like the right customers that understand their business model, because they also a customer out there that don't care about the sustainable way, so it become the challenge for the company itself.
Sure. So once you implement, I think for startup, everything in their growth stage, you need to, it's about how measurable they are. So how do you measure, for example, at Aruna, how do you measure the sustainability matrices that you have?
Okay. In Aruna, the interesting point is we combine between the profitability metrics and the sustainable metrics. For example, we have the metrics where we need to acquire more fishermen on board. We need to ask more fishermen on board to become like the Aruna fishermen. But again, to become Aruna fishermen, there is several factors that they need to fulfill. For example, they need to do like the sustainable fishing practice by using like the sustainable fishing gear. They don't catch in the marine protected area and they don't catch like the baby crab or baby lobsters. And they also do like the mangrove planting and beach cleanup with us. Just by that, then they can get categorized as the Aruna fishermen. So what we do in the team is they cannot just hire like every fisherman, but they need to hire fishermen with several criteria. So I think that's like the metrics that we have for them.
Got it. I just want to shift focus a bit and look at digitalization and sustainability, which is very a huge part, a big for both Southeast Asia and also Indonesia. Avina, let me start with you. For both, like I said, for both Southeast Asia, especially Indonesia, digitalization is very critical and it can enhance sustainability multiple times. But there are several key challenges, everything from financial inclusion to lack of credit to access to capital, slow growth of ICT infrastructure, limited supply of skilled human resources. These areas, Southeast Asia, especially Indonesia, also very large underbanked and unbanked population. While the pandemic has accelerated digitalization, it's also exposed the divides between the digital have and the have-nots. So as a VC, you're among the largest operators in Indonesia. How do you see this opportunity?
Yes, absolutely agree. Yeah. The unbanked and underbanked population in Southeast Asia is still at over 70%, right? Majority of them are living in Indonesia. So we and our startups see that this is an opportunity to improve financial inclusion as well as financial literacy coverage in the region. If you look at the financial inclusion index in Indonesia, we have reached 76%. Yet it's still lower than neighboring countries in Singapore at 98%, Malaysia at 85%, and Thailand at 82%. The financial literacy index in Indonesia is even lower at 38%. So we have a lot of room for growth, a lot of work to do as well from the companies and the investor side, that we need to invest more to promote this. there are a number of fintech investments that we have who are solving the problem. One is CoinWorks, which is our Indonesia-based fintech startup that empowers micro, small, medium enterprises underserved by traditional financial institutions so they can expand and provide financial access. They recently launched their new bank platform and essentially aiming to provide frictionless banking solution for MSMEs and integrating the client's cash flow and bookkeeping solutions to do better underwriting. We are also an investor in Stockbit, our investment platform that aims to democratize access to capital market to investments. It aims to increase Indonesia's financial literacy by making investing easy. It also has a wealth tech platform, Bibit, with a robo advisory to help first-time investors to invest, charges 0 transaction fees. They have 24/7 live customer support, and they have served over 1 million retail investors across 500 cities in Indonesia, which has grown tremendously, right? I think through the pandemic, we have seen the statistics from KSE, the Indonesia Securities Depository, that the number of capital market investors increased by about 93% to 7.5 million. And similarly, the mutual fund investors increased by about 110% in 2021 alone. So we have invested in other subsectors of fintech as well, including open banking, payment transfers, micro insurance, and many more. And they're working to provide more solutions to reduce this gap and this divide, right? We think financial inclusion is a key factor for social inclusion. It involves providing access to an adequate range of safe, convenient, affordable financial services to the disadvantaged and vulnerable groups as well, and being able to improve that financial literacy and financial inclusion level.
Sure. Uttari, can you take our audience through the power of digitalization and technology when it comes to the welfare and empowering of fishermen and the coastal communities in Indonesia? And specifically because Indonesia is one of the largest fishing countries in the world.
Yep, thanks, Joji. Yeah, like you mentioned, like Indonesia, actually we have like the huge opportunity in terms of the marine and fishery. And most of the marine and fishery industry in Indonesia is actually traditional. That's why digitalization in this industry have a very huge opportunity. But in the other hands, we also understand that the fishermen and the people that live in the coastal village, they also have a gap to at least reach the internet connectivity. We have so many islands and with so many challenges in infrastructure. But from what I see from BCI report, they mentioned that there is actually a changing from the government, especially the local, to give infrastructure to the people that live in the coastal village. So I think this is like the opportunity for Aruna also to can expand like our business in the fair and every location that have like the accessibility to the internet. But the second thing is the internet or the IoT can become like one of the things that make sustainability works. For example, in Aruna, we have like the traceability system where we install like the fishing tracker in every fisherman boat. By having this, we can track who fishermen who catch the fish, where is the fishing location, is this fishing location can impact to the marine ecosystem or not. And by having this data, we can sell this data to our customers so they can have a very trust with Aruna. When they buy seafood from us, it means it comes from the sustainable fishing practice. And it becomes like more additional value and benefit to our customers. So I think that's the role of technology. It's how we can implement like the technology in the very right position. Even it's about connecting like the fishermen who are not understand using technology, but as long as we provide like the right technology for them, then it means we can help them connect it.
Got it. Devagari, let me come to you. One trend that we're seeing in Southeast Asia, we're seeing a lot of VCs going out and raise separate funds for things like climate tech or alternate proteins, sustainability, clean energy transition, ocean plastic crisis, then EV manufacturers, funds that are targeted at to capture the carbon footprint. So are these funds the way ahead? And a related thing that I wanted to ask you was, are VCs raising separate funds to support startups in these sectors? Because do they see this as an easy way out rather than pushing their existing portfolio towards ESG adoption?
That's a really great question, Joji. And I think having these focus funds are also important, especially because they integrate the peculiarities of these particular investment themes into how the fund gets finally structured, the selection of portfolio companies, the practices on how you want to manage that fund, and then to, of course, also measure impact. And these I feel are not easy asks because while we're building these maps, we're doing these several consultations. And one of the things that we constantly keep hearing are for some of these newer spaces, such as electric vehicle manufacturing, or even for waste management. There are policy considerations that need to come into play, and there is also a certain way that the market is not quite ready in some areas. So there needs to be a very different kind of investment strategy where you may have to do a lot of capacity building. You may need to bring in some of these softer angles to really prepare the market for the acceptance of such services. And we've heard that, and we do realize therefore why a certain kind of approach is required for these funds. And therefore these are not easy asks, and if these need to be done well, there needs to be a concerted effort and expectation management, right from the LP bosses to the investee companies. But having said that, at SDG Impact, we're also beginning to hear a lot from fund managers on their desire to look at legacy portfolios and how might they integrate impact and sustainability as part of their systems and processes. And again, I'll bring back our focus on the SDG Impact standards and how they have been crafted to really translate high level principles, which say that, okay, this is how you should be investing responsibly. And we've broken them down to actual practical everyday business decisions. And we have business actions for companies and for private equity, for VCs, across things such as governance, how do you look at management approach, transparency and disclosure, strategy, and with guidelines on how companies and funds can take small steps and baby steps at times towards integrating it. So it can't be done in a day, but I feel with a standardized process and with the empirical evidence that will come out as you start integrating these processes that can drive your decision making, it definitely is possible.
Yeah, thanks. Avina, let me come back to you. You spoke about the fintech opportunity in Indonesia, and a related space is the warungs. There are, I think, over 50 million warungs in Indonesia, and everything about them can be digitalized. We're seeing so many startups trying to cater to them, be it the supply chain requirements, inventory management, bookkeeping, access to credit, payment, sourcing, deliveries. All of it can be digitalized. Therefore, how do you see this space?
Yes, very, very interesting segment. We have quite a number of portfolios serving the market. As you said, right, in Indonesia, there are over 50 million of micro, small, medium enterprises, including the warungs, right? And they contribute to 97% of employment in the country and over 60% of the GDP. I think today, based on the Kominfo data, only 17 million of the warung are digitized. So we have a portfolio called Warung Pintar, which provides solution to digitize underserved warung across Indonesia. They now have about 100,000 active warungs equipped with tools and access to data processing, analytics in about 150 cities coverage. They also work to provide linkage to local banks, lenders, and insurance companies, so to assist them with growth of the business and growth of the owners as well. This, with the digitized supply chain and mobile app, will enable them to have easier, more accessible product orders, tracking, and dashboard monitoring as well. Another portfolio we have is Buku Warung, which is providing accounting and bookkeeping service for warung, and they have partnered with major banks in Indonesia to provide access to credit for these warungs. This is important because the traditional banking sector is still focused on using the asset adequacy ratio, using the collateral appraisal approach. So a lot of the warungs and MSMEs are still not able to get access to banking services, right? And now with the solution surrounding the warung and the micro, small, medium enterprises ecosystem, we can leverage on the digital track record the financial record, the supply chain data, so we can help the warung owners to grow the business.
Got it. Uttari, just a related question, be it warungs or your sector, which is aquaculture or even agri-tech. For most sectors in Indonesia, the biggest challenge is access to capital. We've seen several startups, like several tens of them in Indonesia, are trying to offer financing options, and they made it very attractive. They give you fast access to credit. They have large loan ceilings, and many of them are looking at lending as a business. But the challenges still persist because interest rates are often 2 to 4 times higher than the bank, and for a startup, you still need to return capital to your investors. So, uh, how can startups and VC really address financial services and financial inclusion from a sustainability ESG perspective? Or do you think these initiatives will always be driven by having to return money to your investors?
Yeah, what we believe in Aruna is actually once you want to implement like the ESG or sustainability, it means that you have to be like profitable at first. I mean, you have to concern about your profitability as a company first, because what we always say, like if you want to helping like others, it means that we need to help like ourselves establish at first. So that's by having that concern, we always taking care about how we can use like the profitability to give like more impact. So in Aruna case, again, the metrics is about if, for example, the metrics about acquire more fishermen, it means when we have more fishermen, it means our transaction again is going to be grow. So by have the growth in transaction, it means we also growing the number of fishermen, and it means we can give more impact. So I think it's very important to integrate like the metrics for the business and also the metrics for ESG. But most of the companies sometimes they have like different metrics, and it becomes like the confusion not just for the us as a business but also for the team.
Got it. Devaki, like from your perspective, how important is the communication angle? It is to to tell your customers for any startup, bring them into the sustainability conversation and be transparent about how the ESG principles are a work in progress as these companies grow. Let me just use 1 or 2 examples. For instance, in the case of Gojek, now Goto, which is a combination of Gojek and Tokopedia. The company had appointed a head of sustainability in 2020, and then soon they came out, publicly with the ESG framework. Both Grab and GoTo have, pledged their commitment for zero carbon emission. And GoTo has actually gone a step further. They've said that the entire fleet of vehicles will be electric vehicles by 2030, and they've also pledged to produce zero waste, and also using minimize use of single-use plastic across the whole ecosystem. Back to my question, which is about communicating the goals and targets to your audience and your users. How important is it?
I think it's a very important aspect of how companies and funds that communicate or want to communicate about their intention to create impact. And it is slowly moving towards being not simply as something that is good to have, something that is, nice and decorative, producing a good report, but it's something that may become non-negotiable in the near term. I mean, look at the mega trends around rising environmental crisis and almost a breaking point where inequality is concerned. Communicating how sustainability is part of your business as usual scenario is critical. So we must also not forget that this is also a call to action to invite all stakeholders, like you said. How do the consumers participate in that entire conversation around sustainability? So how do they participate and become part of that process? Also, because it's not just about who's asking the questions in terms of the big bosses, but the questions are also coming now from your consumer side. Your demand side market is now demanding, how are you looking at sustainability, integrating it as part of your value chain? So therefore, if you're not able to communicate about it, I think you'll also lose that customer stickiness and that customer loyalty. Therefore, what I feel is communicating such targets and goals will play a very vital role in how you're fostering collaboration which means inviting, different partners, including more funding opportunities for your business, ensuring accountability for your business and stakeholders, and really moving from shareholder value to stakeholder value. So, yeah.
Yeah. Devaki, just one final question to you. In terms of the role of the government, because I'm sure you also work with a lot of governments. We've seen, for example, in Singapore, we've seen the Monetary Authority of Singapore, they've set aside about 2 billion, this was in 2019. They set aside $2 billion towards green and sustainable investments. In Indonesia, we've seen the government come out with a commitment to reduce maritime plastic waste by 2025. Vietnam has set a time frame to reduce or the end of single-use plastic by 2025. What more can governments do here?
Sure, and I'll speak from a very from the perspective of private sector participation and how governments are creating a more amenable ecosystem for private sectors to come on as collaborators. Because clearly we've understood that the governments alone can't push for for these development goals. Based on aid or based on the budgets that they set out or through public financing. There is a concerted effort that is required to bring in the private sector. But in order to do that, the roadmap should be very clear. So what we've seen now, Joji, is governments are increasingly integrating SDGs and increasingly looking at their commitments, not simply in terms of putting out a call to action, but really laying down the brass tacks. How do they integrate it as part of their midterm development plans? How do they decentralize that process? How do the provinces also take or provincial governments also start taking responsibility for some of those actions, and then also to report on it. So we are now, and especially with the COVID-19 backlash, the recovery plans that the governments have put together integrate a lot of these intentionality to bring in, the sustainable development goals, looking at social metrics, along with some of the financial recovery plans that need to happen hand in hand. So the governments are doing that. And as part of our efforts, with the maps coming out, what we've also done, Joji, is part of the process we've dedicated to identifying what we call white spaces. So these are spaces which have huge investment potential, but they need certain policy considerations or regulatory considerations to be in place in order for the private sector to have a better role or a more amenable space to, regulatory room to move in. So those we hope to take to the government and create policy dialogues around so that we can, start looking at policy reforms, thereby improving this collaborative environment.
Got it. I'm just going to take a few quick audience questions. Let me start with Avina. We have a question from one of our attendees who asked, if you were to choose one, what do you look at first when doing a due diligence when investing in a company? Is it the financial performance or the ESG framework of the company?
Well, we invest across stage, from the seed to the growth side. In fact, when you invest in the seed stage, they don't have financials, right? Sometimes it's still idea stage. So financial is definitely not the first thing that we look at from that perspective, right? I think at the growth stage, it's a little bit different. There will be historical track record that we will look at when we assess the investments. In terms of what we look first, right? We believe that we need to generate strong financial returns as well to our investors. So we are a sector agnostic VC firm, but we also believe that ESG is an important factor that we need to take into consideration during the due diligence. So both are taken into account. Obviously we will focus on the strong growth trajectory, the high potential companies when we look at investments.
Sure. Just a quick one more audience question to you, Avina, in terms of are your investors, which means the LPs, are they pushing VCs to have an ESG agenda? And does being ESG sustainable or having an ESG framework as a VC firm, does that help you in raising capital?
Interesting question. I would say it's a bit mixed, actually. There are some LPs that would like us to have more sustainability. In fact, I think most of the asset managers today, right, being signatory to UN PRI, for example, or having commitments to sustainability themselves, they would have an ESG BBQ during LP questionnaires. That being said, though, not all, I would say, are really pushing and taking an active role for asset managers to really embrace and take a really forward step towards ESG and impact integration, for example. There are some other investors. We have one in particular, DFI, who has been strong supporter and very, very helpful for us in this journey.
Got it. Devakri, I know you have a hard stop at 3 p.m. Singapore time. One quick final question to you from our audience. As an impact partner of the newly launched Indo Impact Fund, how does UNDP work with the fund, and how do you see it become a framework for other case studies?
Sure, Joji. So the Indonesia Impact Fund is actually a wonderful example of how the fund is structured around some of these development challenges, in Indonesia. So they've specifically mentioned themes around education, healthcare, agriculture, for instance, that they want to address through this fund. So how UNDP is coming into the picture is as an advisor on how the impact management and measurement framework will work for this fund. So integrating it as part of their, the fund management practices. So which is where the standards come in. Once the investment is in place, what kind of measurement metrics need to be added in order for us to, calculate impact, and in order for us to report and disclose, what the fund has managed to achieve in terms of impact, along with the commercial viability of these investments. So that's the kind of role that we are playing, and we do hope that this provides like a good framework, or at least an example that can be replicated by funds elsewhere.
Got it. Just one very important question. I want to give it to you, Tari, in terms of when we talk about ESG principles. One of the things that we didn't touch upon so far was diversity and board structures. You are a woman founder. Indonesia has several high-profile women entrepreneurs, but yet there are still very big gaps when it comes to funding for women-led startups. And the venture capital industry actually remains very much male-dominated, both among the decision makers as well as in terms of the entrepreneurs who they fund. So, what do you think needs to change here?
Yeah, I think to give more women opportunity, it's gonna be have a relationship with the sustainability, because from what I see, the trend of the industry, most of the people that think about the sustainability, most of them that I already met is a woman. And by having that, I think it's gonna be a positive impact to the company, because once they have women on board, they also can think about the ESG and also the details about how to give like not just the business but also the impact. And what should we change about this outside the opportunity is actually it needs to comes from the woman itself, because from what I see, most of the women they have like a very consideration to become a leader. They don't brave to become like the leader of the team, and they afraid to take a decision, but actually they also have a potential for that. So I think what we can create is actually give them and encourage them to become like the leaders, and also to give them opportunity to create like the sustainable metrics or so on in their company. I think that's gonna be like a good future for to have like the balance between the men and women in board or the leaders position in company.
Yeah, got it. I think we just have a couple of minutes left. Maybe we can take one or two more questions. Avina, let me just, what next for East Ventures? You have released a sustainability report. So what are the next steps that you want to take to make the next generation of startups more equitable, responsible, and stakeholder focused?
Yes, great question. Obviously, there is still a lot of to do from here. This is still our inaugural report, and we want to improve year on year. Right. And with this socialization of framework and toolkit that we have, we are keen to work with our ecosystem, our portfolio companies, to drive home, more sustainability practices, more ESG practices, so that the founders, the future investing companies, the current investing companies understand, the difference between ESG and impact, as you discussed with Devahuti earlier, so that, we have a much more sustainable and inclusive future going forward.
Yeah. I don't think we can take more questions for attendees. If you have additional questions, do send it to us. We'll send it to the panelists. We will have both the video and the transcript of the session on our site very soon. And related to the point on diversity, the Deal Seat Asia research team had actually looked at all the deals, over 1,000 deals in Southeast Asia last year. And they found that only about 17% of the total deal value went to women companies that had at least one women founder. And if you take Grab out of the equation, it's actually low single digits. We'll ensure that you get a copy of the report after the session. And to all our panelists, thank you so much for taking the time to join us to share your valuable insights. And to the audience, thank you for joining us for this session. We hope that you can continue to be part of our webinars going forward. And thank you all. Have a great evening. Thank you.